Lululemon, 145 and change. Let's get the whiteboard going here. Stock is 145.75. And what is our expected move, everybody? Okay, anybody besides Joey? You know, I'm more in the camp of about 14 bucks. So if we look at the 146 straddle, the 146 straddle is trading about 14.50. Okay, the 146 straddle is 14.50, but we're actually 30 cents in the money. Or, based on the 145.75, 25 cents in the money. So really about 14 and a quarter of premium. I know TOS has it a little less than that, but really around $14 is the move. And I will tell you that $14 either way, and I'm going to show you the charts here in a second, bring it to some pretty significant support and resistance levels. Okay, check this out. Okay, downside, you certainly have the 200-day moving average. Okay, but you see this area right here back in June, July, August here that was some resistance in here. That's right at that 130 to 131 area. Yep, consolidation, and that's what I would tell you. It also coincides with the high of this volume area. So below, there's definite support here around 137.5, 138 with the 200-day moving average. Below that, though, 130 to 131 is really the next area of support. Bill, I don't know. Anybody else having issues with the sound? Okay, and to the upside, you can see that recent high here right around 159 is going to be the first level of resistance, and I wouldn't, on a big blowout move to the upside, I don't think that 165 is out of reach or the old highs here. So support around 130-ish. And resistance up at 164. Okay, now look at this chart. It really has consolidated, like Chris said, over the last 3 months, 2.5 months. It really has traded very tight range, 142 to basically 152 with the exception of this one little blip up here. Do I expect that to continue? No, I expect a breakout from this consolidation, one way or the other. The yellow is volume. And I need to figure out a way to get that better on the chart here, but the yellow is volume. Volume accumulation here. So I'd first look, obviously, to an iron condor, then a strangle swap. Let's see if something makes sense here. Okay, so going off of that expected range of roughly 131 and 160, let's look at some sort of iron condor here. Though, on the upside, there are not $2 strikes. Once we get above 150, it's $2.50. So that looks dreadful. That iron condor looks dreadful. There's some resistance there. Yeah, there's definitely some resistance there, Frank. I mean, I could put that on the whiteboard. That's only half of what the expected move is. So the 132, 130, and 160, 162 half iron condor is only trading about 90 cents. I mean, from reward to risk, that's just awful. Break evens of 130, 110, which isn't so bad to the downside. But then 160, 90, which isn't so bad to the upside. But for 90 cents, no thank you. That reward to risk is just not enough, not paying us enough there, folks. Okay, let's see what Vol is doing, as Chris just said, on a strangle swap. So let's look at 130 and 160. Just choosing those strikes because those are the even strikes and probably where there's more open interest, liquidity. And I really, really crushed volatility here, guys. There's no way this thing is going to look good. First off, this thing's going to cost about $1.20. And with the volatilities that I've used, if we can wait all the way to Friday, it's not bad. But for a one-day move, doesn't look great. But that being said, look at what I did to volatility. I took almost 50% implied vol out. And you know what? I still don't know if that's even enough. So I'd be very, very hesitant on a strangle swap just because of what we're expecting in implied vol. Really, really, I think that's a tough one. So I'm going to put up here too uncertain. Now, what do my tea leaves show me? I mean, honestly, it's all going to come down to guidance. And they're going to report good numbers because they raised their guidance last earnings. So they're going to report good earnings. It's a matter of what they say about guidance, which is going to direct the stock. We've seen that, that picture before. We've seen that show before, and there's just no edge anywhere that I see here. Not enough, of a potential profit to do anything, in my opinion. This is one, to me, that I would wait till after earnings and see if we move towards either of those levels. Or if the stock actually doesn't move very much and vol gets absolutely crushed, maybe that's the time to step in and buy some volatility. I don't think that time is right now. Makes sense? I mean, I know we all want to, try and find a, something to trade here, but to me, this is one that I want to watch with binoculars from the sidelines, see the reaction in the stock, and then go from there. All right. Questions, anybody? Comments? Yeah, I believe Home already had earnings today, Gary. Let me just keep the recorder going. Yeah, they had earnings this morning. Stock absolutely hammered. Guidance, Michael, is what they're expecting moving forward. So maybe they had great sales, great revenues in the past, but if they see a slowing in the future, that's the guidance. They're giving guidance as to what they believe their sales are going to be over the next period of time, 3 months, 6 months, rest of the year, whatever it is. So Gary, in Home, it actually, excuse me, sometimes more important, Ed, but definitely just as important. You can see the stock actually on a tick or two traded all the way down to this valley, the Christmas massacre here this morning. And that would have been a good entry point after the fact. If it gets back down there, probably look to potentially sell a put spread. Right now, I wouldn't do anything based on the rally back it had today. But if it does retrace, excuse me, retrace back to that low today, which was 1713, absolutely would look to potentially sell a put spread. So I'll keep it up on the board. I just added it to the watch list here. All right. All right, let me get this. You're welcome. Let me get this populated here. I'll put it up in the room, and I'll be back in just a few.